What's going on YouTube? In this video, we're going to go over everything you need to know about the breaker from start to finish and leaving you guys with a model that will really improve your trading and catching sniper entries like this. Before we get into the video, make sure you guys are following me on Instagram if you guys have not already. This is where you can find me, as well as I'm constantly uploading value and giving free education to the community through my Instagram, as well as I'm always checking my DMs and replying to subscribers and followers messages that you guys do send me. All right, back to video. So in this depiction here that we have on USD CAD, the first thing that we want to know about the breaker here is the pattern itself. So the breaker is a formation from high to low to higher high, and then as we break the low, right, as we break this low, right, this last down close candle from this low now becomes that bearish breaker. And once price action comes back into that area, that is now a resistance level to then take short. So it looks something like this. So we have a high, a low, a higher high. This high then takes out this high just like so. And then as we break lower below this low, right here, as we break lower below this low, it is now a resistance level to where price action comes back up into this low. It is seen as resistance for a continuation to the downside, which opposing from the opposite stance would be a low, high, lower low that takes out this low. And then as we break above this high, this is now seen as a bullish stance. So when price action comes back into this high, it is then found support to then see that overall push to the upside. So this would classify as the bearish breaker, and this would classify as the bullish breaker. So when identifying our breaker here, I like to draw it from the lowest wick. As you can see, this has the lower wick to the down closed candle, right? From a bearish breaker, you want to draw out the last down closed candle, and from a bullish breaker you want to draw out the last up closed candle. We'll talk about this a little bit more when I show you guys bullish examples, but for right now, this is the last down closed candle that before creating this move higher that took out this high. So as price action breaks below this last down closed candle, when price action reaches this area, it is now a resistance level to then take shorts down into our standard deviation and liquidity pools. We'll talk about this a little bit more. As you can see how I drawn this out from the lowest wick itself, this had a lower wick than this, but this was the last down close candle. So from the last down close candle to the lowest wick, we draw out our breaker. And then what I do here is then I draw out my standard deviation, right? So from this low to this high, right, from this low to this high, right, we can draw out our standard deviations, which are algorithmic levels in price action. So you guys can take a screenshot here. So we have 0, 1, 0.5, negative, negative 0.1, negative 1.5, and we go all the way down here, all the way down to 10. So you guys can draw out my standard deviation levels, right? And in this scenario, we're aiming for a 3 standard deviation, which is also in alignment to this order block, which is also in alignment to this order block, right? When drawing out your standard deviations and targeting, you want to align them with PD arrays or liquidity. You don't just want to take profits at a 2 standard deviation or a 2.5 standard deviation and have no reason to be there. So in this scenario, there is an order block here at a 3 standard deviation. So that's where I'm going to take my profits. And as you can see, price action comes up back into that breaker block, finds resistance, and then comes down into that 3rd standard deviation perfectly, right? A little pips lower, but still perfectly before then leaving it. So this would have been a really sniper entry from top to bottom. And this is really the key cornerstone of the breaker and why it's so powerful, paired with the standard deviation, which not a lot of traders know about. So this is something that you guys are getting exclusive. So coming into our next example here on gold, the key cornerstone of the breaker here is understanding narrative, right? So in this depiction here, we came lower into Asia session and tapped into this bullish order block. We tapped into this bullish order block in Asia session, which then pushed us higher. So understanding from this depiction here, right, the overall trend of the marketplace is pushing higher prices. Like, we understand the narrative of the marketplace at the moment is higher prices. So coming into London session here, marked by this yellow rectangle here, these vertical rectangle, we understand that the narrative of the marketplace is higher prices. So when we're taking a trade here, we want to take trades that's aligned with higher prices. This is why in this example, even though this may seem like a bearish breaker, if you would have taken a short here, you would have ultimately lost because you're not understanding the narrative of the marketplace. Right, so understanding the narrative, Asia session, we came down into this bullish order block and we found support, pushed higher. Coming down into London session, we came lower into the same area and then we left it. Boom, we broke structure to the upside after tapping into a bullish PD array, overall bullish signatures, which then left a bullish breaker, right? We had this low, we created this high, then we created this lower low, and then we broke above higher. So anchoring our rectangle from this high of this last up close candle, right? For the bearish breaker, we used the last down close candle, but for this bullish breaker, we used this last up close candle. So from the high here to the low, we can measure out our rectangle, and this would be our bullish breaker. So we're anticipating price action to come down into this level to then see a push to the upside. We understood narrative, price action came lower, tapped into a bullish PD array, a bullish order block, left it, which also left a breaker. So on the lower time frames, we're anticipating a pullback here for a continuation to the upside. So I can put my limit order here at the high, stop loss just down here. And then what we can also do, we can make out our standard deviations from this high to this low. We can gather our standard deviations, and it looks like we have some liquidity up here. This liquidity pool and this liquidity pool plus the 3 standard deviation. So we have this liquidity pool near the 3 standard deviation. So I'm gonna mark out my take profit up here at the 3rd standard deviation, just above that liquidity pool as we reach up there. So this would be then my trade idea. Price action comes down, taps us in, reaches up into our 3rd standard deviation, taking out this high, tagging us in, and it goes a little higher, but this was overall a 3-to-1 R trade. Super solid. I'm content with that. On to the next. Coming into our last example here on the Dow Jones, as we can see here, this is a mitigation block, which is exactly like a breaker block, but instead of price action take out this low, right, price action fails to take out this low, but still gives that break to the upside. So this would be classified as a mitigation block. Same exact concept applies. It's just in this scenario, price action failed to take out this low, but we still get that break. So we still look here from the highest body right here. We have the highest body to the highest wick. We extend it forward, and this would be our mitigation block. Same exact concept applies, just a different name and a different structure. So the mitigation block would look something like this. Boom. Same exact concept, just this high failing to take out this low, just failing to take out this low. Same thing from a bearish perspective. We just fail to take out this high, but same exact concept applies. So as you can see in this scenario, we have been making higher prices for the Dow Jones. We've been making higher prices, so narrative is higher prices. Price action finds support here at this bullish order block. We find support here at this bullish order block. Price leaves it, comes back again, fails to take out this low, but we still find support and see that push higher. So this last up close candle here would be our mitigation block. So we would anchor our Fibonacci from this high to this low, and it looks like we get a 1 standard deviation just above the high of day. So this would be our area of targeting, this 1 standard deviation. So you would probably take a long here, stop loss just below the mitigation block, aiming for up here for 1 standard deviation for about a 2 to 1 R. 2 to 1 R, just like so. Very, very nice. So let's see how this plays out. Price action comes down, tags us in. And then comes up, tags us out for the 1 standard deviation above this New York session high. And then, right, price action reverses, right? Super, super clean, super solid. See how perfect that exit was? We got out at the 1 standard deviation, just above the liquidity pool, 2 to 1 R, really solid trade. Hopefully you guys enjoyed this video. Hopefully I was able to answer a lot of questions you guys may have had about breaker blocks, mitigation blocks, and hopefully you guys can backtest this and implement this to your own trading and find that consistency you guys been looking for. I'm Arkham. Be safe. I have recently launched my private mentorship. In this private mentorship, you guys get access to beginner and advanced lessons that aren't taught here on YouTube from me, myself. Daily pre-market, live trading, post-market analysis, and trade breakdowns. This is where this mentorship really shines, is that consistent breakdowns, those consistent analysis, calling the markets every single day. You guys are learning from my experience alone, right? This is how I've grown as a trader, is from learning from other traders' experience, and that's how I want to provide to you guys through this mentorship here. We have live trading for the S&P 500, NASDAQ, and the Dow Jones. I am a indices trader, so these are what I'm going to be trading every single day. Psychology lessons, risk management, and trade management plan. Right, trading is more than technical analysis. It's more than a strategy. There's a lot of intricacies that come behind it, like a risk management, trading plan, and psychology, and we go over that in full throughout this mentorship, as well as access to all my models and daily teachings on the Market Maker X model. Right, I am a market maker trader. Right, I have a whole bunch of models from order block theory to the inversion fair value gap trade you guys just seen, to as well as fair value gap models and the MMXM model itself that I am giving you guys access to in this mentorship, as well as a private community where we're there sharing trade ideas, sharing analysis, and overall talking to each other and having a good time. So that all of that for about $30 a month, as well as we do have this early adopters here, which is capped at 120 members. Right now we're at 119. So when people leave the early adopters, a spot actually opens up. So if you guys are lucky, right, and you happen to join at the time someone leaves, you guys can get this insane discount. But most of the time it's, just completely full. So, your best bet is to get into the Arkham Academy if this isn't already full. And last but not least, I have my seat at the table where you guys get all the benefits from the Arkham Academy and the early adopters, plus weekly Zoom calls, answering questions, backtesting with members, forecasting, more in-depth lessons, like lessons on, fundamental analysis and calling the markets. And this is only capped at 50 members. So this is for more of a one-on-one mentorship. If you guys want to speak to me directly, answer questions to me directly, and actually learn from, me in a one-on-one setting, in a one-on-one environment, this is for you guys. So, that's the private mentorship that I am offering to you guys. It's the first link in this YouTube bio, right? Patreon.com/tradersasylum. Or you guys can go on my Instagram, which is also going to be tagged in the link of this bio. My Instagram, Arkhamtrades. It's the first link in that Instagram. that's going to be it for the video. I'm Arkham. Be safe.